Good morning, good afternoon, good evening, everyone. It's my pleasure to welcome you all online here today. My name is Dani Lipkin. I'm a Director of Global Business Development at TSX and TSX Venture today. And it's my pleasure to welcome everybody to the FinTech Festival in Canada. Today, for the next 45 minutes to an hour, we're going to talk about the rise of the Canadian tech ecosystem. With me today is Gregory Feller, President, CFO, and Director of Mogo. Mogo is a TSX and NASDAQ listed FinTech company. Before we get into the discussion with Greg today about the rise of the Canadian tech ecosystem, I want to just share a bit of an overview about what we are seeing in terms of the tech ecosystem overall in Canada, specifically with regards to what's going on the TSX and TSX Venture. So in terms of Canada and our presence in the world, many people underappreciate the global leadership, the world-class financial institutions, and economic stability that Canada avails itself to. We've been ranked #1 in many economic indicators for best places for doing business. We've also have a low debt to GDP and one of the soundest banking systems in the G20. Now, this speaks to the financial strength, but what's particularly important to recognize is our tech ecosystem and how much it's grown. And a lot of that has been growing over the last number of years due to this great ecosystem that we built. So TSX Venture, this is where I work, and which is a global market for capital. Many people know NYSE, NASDAQ, Hong Kong, LSE, but what people don't recognize is how big our capital market system is in Canada. Over the last 5 years, over $250 billion of equity capital has been raised on the TSX and TSX Venture Exchange. This would rank us #3 in terms of companies around the world for raising equity capital. And what people also don't recognize is that it's global traders, global investors, global asset managers who are coming to Canada to invest in these companies, recognizing that there's a growing innovative number of companies coming out of Canada, and that it's important that these global asset managers continue to invest in these types of companies. Now, what's unique to Canada is that many people will recognize us as a natural resource, heavily focused economy. But this has been shifting over the last few years, and we can see this by the change in our market capitalization on TSX and TSX Venture. Our growth sectors, which would encompass the innovation and tech ecosystem, are now accounting for 40% of the overall market cap of companies listed on the TSX and TSX Venture. People underappreciate how much this has been growing. So I want to just give a bit of an overview of what TSX and TSX Venture Exchange are. TSX is one of the world's largest leading global exchanges, with multi-billion-dollar companies listed. The average market value is 1.8 billion, and the average financing size is 77 million. But what's unique to Canada is that we have the TSX Venture Exchange. Now, this is a customized exchange that is built for small, emerging growth companies. And this is where we've seen a lot of great tech companies develop over the last 5 to 10 years. Typically, a company would go public on the TSX Venture when they're at a much earlier stage. So the typical average market value for companies on the TSX Venture would be $30 million. And the average financing size would be $3 million. So what's happening is that we are seeing earlier stage companies who are going public, growing in size, and then graduating up to the TSX. If we actually look over the last 20 or so years, there's been close to 700 companies that started off on the TSX Venture and graduated up to the TSX. We have over 65 companies that have market values of greater than 500 million that started off on the TSX Venture. And close to 40% of our innovation companies that are now listed on the TSX actually started off their life as a public company on the TSX Venture. At the bottom of the slide, you can see a couple of these names, such as Absolute and Enthusiast Gaming, that were early on tech companies, started on the TSX Venture and graduated up to the TSX. Finally, I mentioned earlier the fact that, there's been this growing demand in innovation. And, Canada is known as a hotbed for natural resources such as mining and oil, gas. But when we look at the new listings over the last 5 years on our two exchanges, it's actually been tech that has been the leading charge for new companies listing. It's been the number one sector for IPOs and new listings. And it's also been the number one sector for non-Canadian IPOs and new listings. And what we've seen is that global companies in the tech space are recognizing that Canada has an attractive market to help them grow and build businesses in the tech ecosystem. Last year alone, we saw over 6 companies from Israel in the tech space come and list on the TSX Venture to help them grow the business. We see many US companies come onto the TSX and TSX Venture to help them grow their businesses. And not just listing their companies, but we see these tech companies are actually having a presence in Canada related to their TSX and TSXV listings. And this is helping to grow that overall ecosystem. And now if we look at the returns of the TSX tech sectors, this again really speaks to the growing demand. Over the last 10 years, the annualized return of the S&P TSX Tech Index was 20.3%. This handily beat the composite index, the S&P 500, and was basically on par with the NASDAQ 100. Through the first 6 months of this year, that same tech index on TSX was up close to 40%. And we have a lot of Canadian and global innovators that are choosing TSX as its home. I think it's exemplified most the growing rise of the Canadian tech ecosystem by Shopify's presence now as the #1 public company in Canada. Many people forget that that was a name that went public just 5 years ago. And, its operations started in Ottawa only 15 years ago. It's incredible to see the rise of a company like Shopify from 15 years ago as a startup to now becoming the largest public company in Canada. And what spawned off through Shopify is entrepreneurs are seeing that Canadian entrepreneurs can build tech companies anywhere in Canada. You don't have to be in Toronto, Waterloo, Vancouver, Montreal. You can be in Ottawa, Edmonton, Calgary. And it's just the availability of great tech talent and shred credits and a supportive ecosystem through our venture capital community that is helping these companies grow and not necessarily need to be located in Toronto, Kitchener-Waterloo, or Silicon Valley. Last 2 examples of what's been happening from the tech ecosystem overall is another Ottawa-based company called Kinaxis. They are a provider of software solutions for sales and operation planning and supply chain management. Obviously, over the last 6 to 9 months through the pandemic, a lot of their software has been critical in helping ensure the continuation of the economy. And obviously, this company has risen quite tremendously in terms of its share price over the last 9 months. And Nuvei Corporation. Nuvei is a fintech company based out of Montreal. They recently IPO'd on TSX, and it was the largest tech IPO in TSX history. They raised close to $1 billion in funds. That's in Canadian dollar terms. Nuvei was started approximately 17 years ago by Phil Fayer. Again, doesn't have to be in Silicon Valley, Toronto. Phil started this company in Montreal, grew it over time, and now, is a world-class leading fintech company out of Montreal who celebrated, again, the largest tech IPO in TSX history just 3 months ago. So with that, I'm going to stop my presentation and I'm going to welcome in Greg Feller from Mogo into the discussion. Greg, thank you very much for joining us today. Maybe to kick things off, you could introduce yourself and provide the audience with a bit of an overview of Mogo.
Sure, thanks. Thanks for having me. Greg Feller, President and CFO of Mogo. I spent 16 years on Wall Street in New York, London, and Silicon Valley as a technology banker before joining my identical twin brother to run Mogo. We are a Vancouver-based company. We've been around for 17 years. We IPO'd on the Toronto Stock Exchange 5 years ago. And Mogos really focus on the digital transformation of consumer banking that's happening globally, which has also been accelerating during COVID as more and more people turn to digital solutions. Canada's really been behind as far as the digital adoption of consumer banking, but we are starting to see that accelerate in Canada as well. We've also been pioneers around what we call sustainable finances, and sustainable finances is really a concept of using technology to not just make it easier for consumers to get access to their financial life, but actually using technology to help them make smarter financial decisions. As an example of this, the Mogo card, which is a prepaid Visa and debit card, really focuses on helping Canadians use their own money to spend, so they're in control. And then we also have a carbon offset on all their spending on the card, which directly offsets their spending, so they can effectively become carbon neutral by moving their spending to the Mogo card. We also have launched Canada's first free credit score, as well as Canada's first free identity fraud protection service, all within the Mogo mobile app. And then we launched a couple of years ago, which is gaining increasing attention these days, our Bitcoin account, which allows Canadians to easily buy and sell Bitcoin within the Mogo account. And then we provide credit solutions as well within the account.
So Greg, you kind of mentioned how the Canadian banking system has been slow adopting to the digital transformation. How have you been able to overcome some of those challenges in gaining more traction in the digital experience for Canadian consumers over the last number of years?
Yeah, so I think we've taken an approach of education, for one. Part of it is education, getting people comfortable with, accessing and putting their information all in on a digital footprint in a mobile app. And then by trying to make sure we're offering value and utility in a compelling free or freemium model, as we call it. And that really was one of the big innovations in Canada. I mean, today banking in Canada is still very much, there's still a monthly fee for a basic checking account for a lot of Canadians. So coming out with Canada's first free credit score, and then recently launching a free identity fraud solution, what we're trying to do is provide Canadians with compelling value that's free, that gets them engaged and aware. We also provide what we call our money classes inside the app, where we try to educate. And we think that that's been a big element that's been missing in financial services. Today, most consumers are stretched on the debt side. They've overspent on their credit cards. 50% of Canadians carry credit card debt because of that. They are not saving enough. They're not that aware and understanding of the impact of things like fees and the power of compounding. And so we're trying to do this in a very simple way, in an engaging way. And that's another element that we're bringing to our mobile app is gamification. So how do we make it fun and engaging to make smart financial decisions? As an example, our free credit score, the highest tier of credit rating, we've dubbed Rockstar, and we hold contests around how do you achieve Rockstar status in your credit score. So we're trying to make it cool and engaging to make smarter financial decisions, which actually helps Canadians think about it more and learn more about it.
And so, Greg, I guess you are one of the early companies in the FinTech space in Canada. There's obviously been a growing trend and many more entrants in the space as of late. How have you seen the FinTech ecosystem in Canada evolve in terms of competition? Has that resulted in harder to hire for talent, or has it made it easier? Does the enthusiasm level in the FinTech ecosystem in Canada, has that been growing as a result? What have you noticed in terms of those changes as one of the early entrants?
Yeah, I mean, arguably we were one of the early entrants globally. There's not a lot of fintechs that have been around for 17 years. So, and we were definitely early in Canada. But as you say, there's been a number of companies that have come on the scene, so, I would say the other major player in the Canadian marketplace would be Wealthsimple. They're private. We sort of view Wealthsimple as the Robin Hood of Canada, and Mogo as the Square Cash App of Canada. So we're coming at it from a different approach. The challenge Canada's had, as you know, is that we don't have the deep venture capital pools that places like Europe and the U.S. have, and therefore it's been a lot more challenging for private companies to get funding, especially if you're only focused on the Canadian market. That's also one of the reasons we went public probably earlier than other companies would in other markets, because it was our path to raising more capital and investing. The other challenge Canada's had is because we haven't had that ecosystem. A lot of the developers in that have had to sort of, as we say, learn on the company's dime to build up that expertise. When you're in Silicon Valley, you can hire people that have literally been there and built these products out. You can hire marketing people that have been there, done that, built billion-dollar plus companies. And earlier days in Canada, that was a bigger challenge. But it also becomes a competitive barrier, because if you do hire that talent early and build up that expertise, it's a longer road for competitors to do that. But absolutely, the tech talent is increasing in Canada on both coasts. Obviously, you talked about Shopify in Ottawa. In Vancouver now we have Amazon with a big presence, Microsoft with a big presence. Slack obviously was just acquired by Salesforce. So increasingly, there's a lot more tech talent in Canada, and it is making it more difficult to keep talent. We're also seeing, because of some of the immigration policies in the U.S. players set up offices in Canada to hire talent, even without a presence in Canada on the product side. So we're seeing that in the fintech space. Chime recently opened up an office in Vancouver. I think the advantage the Canadian companies have is that a lot of our developers want to feel like they're making a big impact, and working with the team, being part of building out a company in Canada, seeing the product, using the product, having their friends use it and family use it, they actually feel better about it, and feel like they're making a bigger impact than potentially being one of hundreds of thousands of employees in a Canadian office for a company that they're sort of doing development work for people in the US. So I think that's probably the strongest appeal that the Canadian companies can have, because quite frankly, with valuations where they are today, technology companies are increasingly paying a lot of money for tech talent in Canada as well.
Great. And so, has the ability also, though, to attract talent into tech been a bit easier over the last number of years? I mean, you mentioned there's probably a little bit less of, what we used to see in Canada as the brain drain of everybody going to Silicon Valley. What we've noticed now is in Toronto, there was more tech people hired in Toronto than San Francisco, Seattle combined over the last number of years. We're seeing more people actually come back from Silicon Valley and actually move back to Toronto, start up new tech companies here. Are you starting to see a bit of that effect, and there's more enthusiasm towards staying in Canada versus going to the US than maybe you did 5 to 10 years ago overall?
Yeah, I mean, absolutely. Again, because we are seeing a successful tech ecosystem in Canada, when you've got, as I say, players like Slack getting acquired for close to $30 billion by Salesforce in Vancouver, and Shopify, arguably one of the most successful technology companies globally in Canada. I think increasingly Canada has a lot of credibility in the technology space, and I think our developers, as I say, would, all things being equal, prefer to be building a Canadian company, working in Canada, building a Canadian company, than working in Canada, helping support a U.S. business. And obviously with COVID, as well. You're seeing we've had developers that have been working for U.S. companies that the U.S. company wants them to move back down to the U.S. and they don't want to, and they want to stay in Canada. That's obviously an attraction for us. So absolutely, the tech talent has increased significantly since we started. It's become more competitive as well because of that. But ultimately, I think it's better because we have deeper pool of talent, and it allows companies to move a lot faster. Because as I say, in the past, when you had to hire the talent and train them, it took a lot longer to ramp up than it does today.
And so I just want to go back to a point you made earlier, how you went public a number of years ago because there wasn't necessarily the availability of private capital. So what were some of the considerations of going public? A lot of people around the world look at Canada and don't understand this ecosystems of companies going public at earlier stages than they would anywhere else in the world. What were some of your considerations and thinking at the time of going public?
Yeah, so obviously going public, brings additional costs for sure to a company, and a lot of additional requirements, right? I mean, you are a publicly reporting entity. You obviously have to have audited financials. Everything is a lot more transparent, but the benefit side of that is that you get a lot more access to capital, and as you just mentioned, in Canada there is a history of earlier stage companies going public earlier, and investors investing in earlier stage companies in a public context, versus say the U.S. where there's a ton of capital for private companies, and quite frankly, because of that, in the U.S. what you're seeing is, by the time companies go public, they could be 50, $80 billion companies by the time they go public. And the majority of that return has actually accrued to just private investors. And I think, Shopify being a great example. In Canada, you mentioned Kinaxis. There's a lot of examples where, the earlier stage companies have a potential to generate significant returns for public shareholders in Canada, which I think is unique. The other thing is, in our sector anyway, transparency and being public actually helps our credibility as we attract customers, especially to deal with their financial lives. They want to, make sure that they are working with somebody that's a trusted party. And being for instance, we are the only TSX listed company in Canada that allows you to buy and sell Bitcoin right now, and we think that helps from a credibility perspective and a trust perspective with our customers.
And so I guess you're mentioning a lot of your relationships with regulators and specifically banking regulators. How has that kind of changed and evolved over the last number of years in terms of their acceptance of FinTech and what you're doing with consumers? How has that changed the last number of years?
So we are not a bank, so we are not regulated as a bank in Canada, but we are subject to a lot of different regulations across Canada. As an example, on the crypto side, we are now a FinTech regulated business, and a money effectively licensed as a money services business. But I think there's definitely an increased awareness of helping support the FinTech ecosystem. I mean, Canada's banking, as you know, has been pretty concentrated among a handful of banks for, effectively forever. So I think we've been slower to adopt that. However, if we don't adopt policies that support technology and innovation around financial services in Canada, what is effectively our largest industry in Canada today in terms of employment, Canadian banks will make $100 billion of pre-tax profit this year, is at risk of that value transferring to the big players in the U.S. like a Google, like an Amazon, PayPal, Facebook, etc., and which we've seen in other sectors like media, advertising, retail. So I think that there is a more awareness and increasing support, but obviously we think that there needs to be continued support around building out the fintech ecosystem in Canada.
Too. How have you both transformed your businesses to appeal both? I'd say it's twofold: to investors and to consumers. Maybe Greg, I'll start with you.
Sure. So, yeah, as I mentioned, we launched our prepaid Visa card recently with a carbon offset, and we're really one of the only company in Canada with that program, maybe one of the only ones in North America. But effectively, what we have done is we have made the link within this concept of sustainable finances. We have made the link between consumption, financial health, and planet health. And that link is that about 70% of our individual carbon footprint is driven by our consumption. What is the biggest challenge consumers have today? Their biggest challenge is they're actually overspending. They're overspending, which is why 50% of them carry credit card debt. How do you improve your financial health? You reduce your spending, you reduce your consumption, and by definition, you will reduce your carbon footprint. But we went a step further to say that all the spending that you do, if you put it on the Mogo account, effectively, we have partnered up with an offsetting company, and we will do a direct carbon offset, £1 of carbon offset per dollar spent on the card. So as we say, it's the ultimate rewards program. It's about saving the planet. We absolutely believe that this whole ESG area is increasingly key for your business, because the next generation, the millennial and Gen Z, are making decisions, purchasing decisions, and relationship decisions based on their view of the impact a company is making on the environment. And if they believe that you as a brand are not doing the right things, they will start boycotting your brand. So actually, there is a very direct link, we believe, between doing the right thing as it relates to ESG initiatives such as the environment, and ultimately driving shareholder value, because ultimately consumers are going to be changing where they allocate their dollars to companies that they believe are actually supporting these initiatives.
David, on your end, how is this? How has the ESG evolved some of your thinking in both investors and consumer over the last number of years?
Well, we haven't changed much over the years. We like to think that we've always been aware of ESG matters, and always had a welcoming environment for our staff and our customers, and encouraged social and environmental awareness. Over the years, we've been particularly excited about providing financing for projects in Canada's north and the Arctic that have been environmentally friendly type projects. We provided, for example, hydro lines up to remote locations to preclude the use of diesel fuel to provide electricity. We've provided financing for hospitals and schools throughout the Arctic. So frankly, I'm encouraged to see ESG movement progressing as it is. I think that's what we business folks should always be thinking about, a win-win. How in our case, we think we have a highly efficient banking model, and how we can use it as a tool to provide financing in areas that perhaps more difficult for other banks that are helping our fellow humans have a better life and preserve the in the Arctic, the highly sensitive environment that they're living in.
Dave, I just want to go back to a question that I had earlier asked to Greg and get your thoughts on it. With the rise of the tech ecosystem in Canada, and sometimes the competition for talent and the continuing evolution of that talent base in Canada, has it presented you with a challenge or opportunity in terms of employment for your own employment base over the last number of years? or has it been, a hindrance? What have you thought in terms of the talent system in Canada over the last few years and its ability and your ability to attract that talent?
Well, it's never been a hindrance, and I think if anything, there's more qualified employees to choose from. We live in primarily in London, Ontario, so we have the advantage of being close by to Toronto and the 20-odd universities that are in Ontario. So it produces a lot of qualified people, and oftentimes information technology professionals will prefer to live in around London, a place that's a little cheaper to live in. So we're able to attract people quite easily. We try to keep a really happy, cheerful work environment. We have our facility, our main tech facility, located at London Airport, and it's complete with ping pong tables and pool rooms, and of course a variety of airplanes to take folks for rides in. So no trouble at all attracting qualified people, and if anything, it's just got better over the years with the universities training more people.
Yeah. Greg, I guess, where do you see, Mogo in terms of the next few years going forward? You mentioned a bit of the evolution with the Carta acquisition. How do you see the continued evolution of Mogo over the coming years in terms of your strategies?
So at Mogo, as they say, that we now actually have sort of two segments, a B2C and a B2B. On the B2C side, which is really Mogo in Canada. Our goal today, we have just over 1 million members in Canada. We're generating about just under $40 of revenue per member per year. As an example, the average bank in Canada is generating, core credit unions generating over $1,300 of revenue per member per year. So a massive TAM. Our goal in the next 3 to 5 years is to grow that member base to about 3 million members, and then increase our average revenue per member to closer to $100, which is still significantly less than where any of the banks are. So we see massive growth opportunity for Mogo in Canada, and our plan is to continue to add innovative products and solutions that, as we say, help Canadians make smarter financial decisions, make it easy for them to get in control of their financial lives, make it engaging and fun. We've actually recently launched a Bitcoin rewards program where we're actually rewarding good, positive behavior as it relates to making smarter financial decisions with Satoshis, which is a unit of Bitcoin. So we think, doing things that are appealing to really millennials and increasingly Gen Z is one way we're going to win against some of the traditional players. And then on the B2B side, our plan is to invest in the Carta business. We're going to be launching in the US next year with Carta. And we will continue to look for acquisition opportunities. We think there's an opportunity in Canada. Because of COVID, everything is accelerating. We think the financial landscape is going to be dramatically different in the next 24 months. And scale matters. And a lot of the smaller players we think are going to be looking for homes that are going to give them more access to capital, and if it strategically fits for us, we're going to look at that as well. So, we see a number of opportunities on that front as well.
So Greg, you mentioned a bit of Bitcoin and the crypto business in Canada. Have you noticed Canada has done more favorably in the crypto ecosystem overall? There's a bit of a better understanding in Canada, maybe relative to other places. Has there been earlier adoption here in Canada, would you say, relative to some other places, or are we a bit behind? Where would you say we kind of place overall?
Yeah, it's a mix. I mean, Canada, as you know, was a hot spot for crypto mining, and obviously a lot of companies raised capital on the TSXV and the Toronto Stock Exchange as related to mining, and that was kind of back in 2017, where there was clearly a Bitcoin bubble, and then that bubble kind of burst, and a lot of those businesses kind of faded. Although, now that Bitcoin is sort of back to, historic highs, there's an increasing amount of attention on it. Our view around Bitcoin is that we see it as not as a currency, but as a store of value. This sort of, digital gold or gold 2.0 concept. And we believe that it's an asset class that increasingly millennials and Gen Z want access to, and we want to make it easy and safe for Canadians to get access to it. I think actually adoption is behind places like the US, and that's because the on-ramps into crypto still aren't mainstream. And I think Mogo's positioned to really be one of those mainstream on-ramps in Canada. In the US, you've got major players like Square and their Cash App. They're doing over 6 billion of volume of Bitcoin a year right now through that. And then PayPal recently announced launched Bitcoin in the US as well. So you've got major players in the US that have are making a big push around crypto, which I think is accelerating adoption there. But like most areas, Canada normally follows and catches up, and we expect that to happen in Canada as well.
David, have you been watching a bit of this of the crypto evolution in Canada? Have you investigated that on your end of any involvement, or is it something you just continue to monitor overall?
No, actually, I think we were the first in the world to create a digital vault over 2 years ago. Launched it, called it VersaVault. And originally I had it planned to store super sensitive documents, but moments after it hit Bloomberg and was announced, we were inundated with calls with cryptocurrency exchanges looking to use the vault to store their keys in. At that time, more than 2 years ago, I thought Canada was in a rather immature regulatory environment for it to get into that business. So we partnered with a company in Europe, and that's using our vault for cryptocurrency keys. Like Greg, I think Canada's coming back now. I think there's been lots of reasonable rules, regulations put in place that support the cryptocurrency industry in Canada. So we'll be likely coming back to Canada with our vault. But as usual, with our companies, sometimes coming out a little too soon with something doesn't do us any favors. So we're keenly watching it, and our vault is I think a wonderful product for keeping keys safe. The other area that we're in is cybersecurity. As a bank, we find ourselves in a highly hostile cyber environment. So we invested a lot in cybersecurity for ourselves, and we have just recently acquired a company, DBG, Digital Boundary Group, that is well known in North America for cybersecurity. And with that company, we feel we have a full suite of cybersecurity products that we can provide to other FIs in Canada, in North America. We're headquartered in Washington, D.C., with former head of Homeland Security as our chairman. So, there's areas in this changing world that we think as a bank, and with a little extra knowledge, capability, capacity, particularly in the cyber world, that we can add some value. So that's what we did recently. That was a few days ago, that acquisition.
Has obviously cybersecurity has been something that's been on your mind, for 25 years, David. Has that been an increasing area of investment, just given what we've seen on a global basis towards a lot of financial institutions, and just the potential for ransomware attacks? Has that been a growing area, not of concern, but just attention always, something always top of mind for you, but even more so than ever now?
Well, absolutely. Probably most people don't know this, but while I was doing my master's courses in biology, I took a part-time job at a maximum security prison in the early 70s, and had the opportunity to meet the old school bank robbers. And nowadays, as things have evolved, the new school bank robbers are could be located anywhere in the world. And as a Schedule 1 bank, we feel we somewhat have a target on our backs. We attract a lot of attention from the nefarious people in the world. So definitely it's always on our mind, and we're always spending and investing and seeking out new methods to ensure that our bank and other FIs can stay safe. Like I say, this acquisition of DBG, they have a sort of a who's who customer list in North America, complement to the existing cybersecurity technology that we had developed in-house. So we're hoping that we can assist others, particularly in the FI industry, with what we've developed for ourselves.
Greg, on your end, in terms of security and privacy, and ensuring data privacy, has that been a growing area of concern for you over the last number of years, or has it always kind of been something top of mind?
Yeah, I mean, it's obviously always been something top of mind for us, and it's been an area of big investment. Again, as a public company, you're under even a higher degree of scrutiny as well, and these are areas you can't afford to not invest in. And obviously in financial services, where you're safekeeping your customers' data, it's a critical piece. So it's something that we continue to assess, and I'm interested in learning more, David, on your solution, and because we continue to assess best-in-class solutions and ways that we can continue to add and evolve our own security systems, because it is something that's never static. You have to continue to invest and evolve it. And then obviously on the consumer side, we think we're innovators there. Our ID fraud is as we say, it is effectively a certainty that all of our IDs are going to be stolen. It's just a matter of when, not if. The issue is, and there's really nothing you can do about that, because our data sits on databases that we don't control, and not everybody's investing at the right level of in security. And so as a consumer, you need to protect your ID from fraud, and that's what our product does, with a real-time push notification to your phone if there's any activity on your bureau, which is the first line of defense. And we think that we've made that used to be a $9 a month product. Now we've made it free. It's the only solution like that in Canada. We think every Canadian should have it. This is about stopping somebody from getting a mortgage or a loan in your name, and you not finding out about it until it's too late, and then it'll take you a year to deal with that. So ID fraud and the impact it can make in your financial health is very real, and we're investing a lot of time and resources educating Canadians and trying to help them protect against that as well.
Are a lot of the solutions that you're finding, are they Canadian made or are they global made? Is that something maybe, is there enough of that in Canada?
Yeah, I would say there's a mix. I mean, we work with, Shopify is a partner of ours, obviously a Canadian company, and we work with other Canadian vendors as well. But we're always looking for best-in-class solutions, and we're obviously a lot of our partners are in the U.S. as well. But yeah, I would say we're seeing a lot of innovation in Canada as well. I mean, banking by definition is a lot more regional. It's not like e-commerce where you can just say, oh, I'm an e-commerce company in the US, now I can sell in Canada. You have to run on the rails in Canada as well. And so a lot of times you need to work with local Canadian vendors that are built for the Canadian sector as well. So, we definitely work with a mix.
Maybe as we just kind of wrap up here, love to get both Greg, David, your thoughts on, where the next wave of Canada tech will be. Like, we've seen now FinTech is starting to grow, obviously, from both your perspectives. We're seeing a rise across Canada in terms of tech hubs. What do you see for a next wave? What will that momentum shift be? Do you think that people are now seeing yourselves, companies like Shopify, Lightspeed, this continuing evolution of Canadian tech companies building in Canada, staying in Canada. Do you think, that will continue forward? We also see sometimes a lot of companies will sell to bigger US conglomerates. What would you hope for in the Canadian tech ecosystem going forward? Do you want more to stay in Canada? Do you want more Canadian dollars to be invested? Do you want the governments to invest more? What would your hopes be for the next 5 to 10 years, and how we can help continue to grow what we've seen evolve over the last decade? Hey, David, I'll pass that to you for just some closing thoughts.
Sure. Well, I, as a Canadian, I'd love to see more growing Canada. I think we have a wonderful country, a friendly, welcoming country, despite maybe the winters being a little brutal at times. So I'd love to see the tech industry in Canada continue to grow. I think with respect to impediments, over the years, and I guess I'm a pioneer in this industry, I faced tremendous opposition from governments and government regulations that just didn't seem to move along fast enough. Thinking back to the early years, I was lectured many times that folks really needed a physical premises to walk in to do their banking, and there's no way that they would do it digitally. And then, of course, time progressed, and then they were telling me that we were just lucky because we started to produce outlier type financial results, and the luck would end. And now they seem to think that there is maybe a room for fintech companies in Canada. And I think even though they make noises to that effect, I think they have to have a hard look at the regulations and make sure that they're conducive to the growth of Canadian fintech companies, and not throw up arbitrary barriers and red tape that slows us down. I'm not too worried about the capital side, because capital seems to find worthwhile investments. It comes from all over the world. So I think growing a fintech industry in Canada and paying particular attention to eliminating the red tape regulation that has existed, that's been my biggest impediment in the entire time since 1993. I never really thought that when I created this bank, that's what would be my opposition. I had no trouble getting customers, no trouble getting the employees. I use the build it and they will come philosophy. In certain markets we've gone into, we've just dominated. However, I had massive opposition from governments all throughout Canada that just didn't seem to get it. So that's the one message I'd like to leave. If you really want to have a booming fintech industry in Canada, governments need to have a hard look at the regulations and evolve them along with the industry.
Greg, just last thoughts before we quickly wrap up?
Yeah, I mean, I think, look, we've had a lot of Canadian successes. You saw, again, Slack getting acquired by Salesforce, Verifin in Newfoundland getting acquired by NASDAQ. So there's a lot of, great technology companies being built world-class in Canada. But, I also agree with David that, as it relates to financial services and FinTech, if we don't support homegrown fintechs and help Canadian companies evolve the digital experience and be the winners alongside where the new digital banking is going, then what's going to happen is the exact same thing that happened in, as I say, in media or retail, where all of those dollars, those profits, those jobs flow to Google, Facebook, Amazon, and consumer banking. Absolutely, those dollars can flow to Apple, Facebook, Amazon, etc. if we are not building and supporting our own homegrown companies, because the digital transformation is going to happen no matter what. Consumers are demanding it. And global players are investing a lot of money in this to own that, and it's important that Canada supports Canadian companies so that we keep that innovation, those jobs, and that capital in Canada.
Awesome. Great last point there, Greg. Appreciate it. David, Greg, I want to thank you very much for joining us this morning. And hopefully everybody got a bit of a better sense of what's going on in Canada in terms of the growth of the FinTech industry and ecosystem. Next up is a discussion presented by the FinTech Growth Syndicate on AI and alternative data. I want to thank everyone for joining us this morning.
Thank you.